have the privilege of opening us with prayer, and today I'm going to use a prayer written by the Right Reverend Libby Lane, who's the Bishop of Derby, England, in recognition of this year's UN-sponsored World Environment Day. Let us pray. Eternal God, whose spirit moved over the face of the deep, bringing forth light and life, by that same spirit renew your creation and restore your image in your people. Turn us from careless tenants of faith to faithful stewards, that your threefold blessing of clean air, pure water, and rich earth may be the inheritance of everything that has the breath of life. In one generation, may proclaim to another the wonder of your works. We ask this through Jesus Christ, your living word, in whom the fullness of your glory is revealed. Amen. Our host today, standing in for our Chief Executive Officer and President, Mary Kate Wold, is Christopher Rowe. Christopher is the Managing Director at the Church Pension Group Investments Department and works with our new Chief Investment Officer, Michael Hood. And Christopher has more than 30 years of experience working with faith-based investors on aligning their investment portfolios with their values, including the last 6 years at CPG. He's responsible for leading CPG's socially responsible investment and engagement strategy and outreach initiatives. Christopher builds deep and successful relationships with companies in which CPG invests, peer organizations, and the Episcopal Church, and other stakeholders with similar values. I am very proud to have Christopher as a friend and colleague and know that we are in good, caring, and expert hands as he leads our discussion today. Over to you, Christopher.
Thank you, Clayton, for the warm introduction. And yes, I'm pleased to be with all of you. And yes, we on the investment team work with Michael Hood. I also want to give a quick shout out to others on our socially responsible investing team here at Church Pension Fund. That would be Alan Snoddy and Jackson Campbell, who are helping lead this work along with the entire investment team here. So welcome to our third quarter Insights and Ideas events. And for those of you who are new to Insights and Ideas, this is a continuation of a series that we've held for the last several years and brings together experts in the field of socially responsible investing. The Church Pension Fund has a four-part approach to socially responsible investing, which includes impact investing. That is, what are investments that have a positive social impact, positive environmental impact, that also generate market rates of return. Second is shareholder engagement. How do we work with other institutional investors to engage publicly traded companies on issues of corporate social responsibility that advance both moral values and economic values? And then ESG incorporation, which is of course a mouthful, and it's been getting a lot of attention in the news these days, but essentially, this is thinking about those environmental, social, and governance issues that drive financial opportunity and risk. And these issues are at the core of a sustainable long-term investing strategy. And the fourth piece to our strategy is thought leadership, which is simply convening and connecting those thought leaders on topics related to socially responsible investing. So this is with the intention of advocating best practices but also growing assets in the space. So today, this week is Climate Week in New York and across the world. And so the collective focus across the world is on climate. So following the hottest summer on record in which the world was literally on fire, the urgency with which to act has never been greater. So most important, as we think about this, we grieve for the lives that were lost and those that are impacted by recent climate events, floods in Libya and the Middle East, record heat in the Southwest, and fires in Hawaii. And these humanitarian disasters, though, also come with enormous economic consequences that governments and companies and investors need to consider. So a number I heard just yesterday quoted at one of the climate events, according to research by NOAA, in 1980, there was a $1 billion climate-related weather event took place once every 3 months. Today, it is once every 2 weeks. So the human and economic costs of climate change are devastating. And so we thought to bring together some of our partners across the world for a discussion today on how faith-based investors are blending the ethical responsibility to care for creation and humanity, while at the same time addressing the financial responsibility of managing investment portfolios. So I am thrilled today to introduce the panel we have today. I've been very fortunate to work with each of these panelists who each bring unique perspectives from the investment and faith-based communities. Starting with Sofia Bartholdy, she is Responsible Investment Integration Director for the Church Commissioners for England. Church Commissioners of England is our sister organization across the pond. It is an endowment fund focused on providing support for the work and mission of the Church of England. Sofia is the strategic lead for the Commissioner's approach to climate change and responsible investment integration, including impact and solutions. Her responsibilities include working with the investment teams to monitor external asset managers' responsible investment practices and the sustainability outcome of the underlying portfolios across ESG themes and asset classes. Next, we have Mathew Jensen. Mathew is Director of Investment Solutions at FaithInvest. FaithInvest is an international nonprofit organization that supports faith groups to invest in line with their values. So Mathew leads FaithInvest's investment solutions team, and he's responsible for research into topics to faith-consistent investing, working with faith-based asset owners and non-government organizations on the practicalities of integrating and implementing faith-consistent investing in their programs. He also works with asset management and investment consulting industries on issues related to broadly to engaging values-based investing. And then finally, we have Emlyn Palmer, who is a partner and head of sustainability at sustainable investing at Albourne. Albourne is one of the consultants with whom CPG works. It's a global investment consultant. Emlyn leads Albourne's sustainable investing practices and has spent more than 20 years in senior roles in the alternative investment industry. Most recently at Saguenay Strathmore Capital, a fund of funds manager and advisor, where he was partner and COO. And full bios for all can be found in the link that is being posted to the chat. So I'll be posting questions to the panel, but as was announced earlier, we really do want this to be interactive. So to the extent that you have questions along the way, don't hesitate to put those in the chat, and we'll do our very best to answer the questions along the way. But let's get it started with Emlyn, please. So Emlyn, you work with all kinds of investors, faith-based investors, others that have a concern about the environment. Could you please provide us with an overview of how investors approach values-based investing generally, but also given Climate Week, what specific strategies are being considered related to the environment and climate change?
Thank you, Christopher. It's a pleasure to be speaking here today with you, Sofia and Mathew. Now, faith-based investors and other climate-concerned investors, describe them, take an approach to investing that, as you say, does incorporate environmental, social, governance considerations. And we see that as sitting within what we call the sustainable investing spectrum. Now, that spectrum is defined in a sense for investment. And, at one end, we have what we call, and I'll ask you to excuse the terminology, but it says what it means, which is values-based abstemiousness. It's not a technical term. It's a term which seeks to describe what it means. And here we're talking about the desire to stay away from participation in certain types of economic activity because they are not aligned with values. It's usually described in some other quarters as exclusionary sectors or non-space exclusions. So this is really about avoiding investments, no matter how profitable they are, just because they're not aligned with values. I mean, which sits very well, as you can imagine, in the space of faith-based investing. An example of such a sector would be gambling. I mean, there are certain other sectors, which would come into that if the concern is around climate, and there are a number of different ways of looking at those, but these are values-based and can vary from one investor to another. Now, moving along the spectrum, we next look at risk management. Now, any investment program, in order to simply maintain its own sustainability, just to keep going, needs to have regard to its financial risk. And, we see sustainability, things like environmental, social, and governance issues have emerged as a 21st century prism through which to, get a good, clear sense of risk and opportunities as well. But from a risk management standpoint, this has, brought some people to the table on sustainability or, environmental, social, and governance issues as a way of making sure they have a good handle on the risks that are in their investments and that they have a strategy for actually dealing with it. An example of investments which may pose similar risk would be, for example, from a climate standpoint, waterfront properties in areas that are prone to coastal erosion, or investments in companies that are very heavy emitters of greenhouse gases. The issue there would be the risk of incurring heavy future carbon taxes. The third segment of our sustainable investment spectrum is about thematic investing. Now, climate awareness is calling for a transformation of the global economy, and this by itself creates a huge opportunity for profitable investments. An easy example would be investment in renewable energy power generation, or any part, in fact, of the renewable energy ecosystem. And we simply call that segment sustainability-themed investing to describe that objective. But then some investors go beyond the financial, and Christopher's already spoken about this, and they go in search of what some people might say are non-financial outcomes, but I sometimes like to describe them as extra financial, like going beyond the financial and trying to gain real world effects or change or impact. Now, these are very neatly encoded in the UN's Sustainable Development Goals, or SDGs. There are 17 of them, and they speak very clearly to making the world a better place, including from a climate standpoint. Now, many investors have strict fiduciary obligations. And again, Chris has mentioned this, because if you're investing, you're usually investing in order to gain good financial outcomes. But now we're introducing a new objective of, impact outcomes, for example, climate innovation and so on. And so this business of pursuing dual objectives can be sometimes challenging, but it's now widely accepted that it is entirely possible to do that. And some examples of such strategies could be what is now called regenerative forestry or nature-based capital, which is seeking to
Emlyn, I think we've lost your audio there for a minute.
And of course, you have a number of decarbonization. Sorry. Okay, so I'll just say, so dual objectives of impact and returns is now accepted as widely viable and feasible, and a lot of practitioners are pursuing it, as indeed our host here today. So all the segments of the sustainable investing spectrum, whether it's values-based abstemiousness or sustainability integration or sustainability-themed investing or impact, all relevant to the approaches of faith-based and other climate-concerned investors, and there are many investment strategies to meet their need. Thank you, Christopher.
Yeah, so I think probably one of the sort of the takeaways from that overview there, Emlyn, is there are a range of opportunities, range of solutions that different investors can take to reflect their values in a particular investment strategy. Two pieces that I just want to build on briefly with respect to Emlyn's comments. One is sort of how does one think about thematic investing? And so we're thinking about sort of what are the trends that are being employed around climate, and how do we put capital to work toward climate solutions? But then also, how are managers thinking about climate-related risks and opportunities in their underlying investment decisions that we make? So maybe this is a good opportunity to pivot over to Sofia to provide an example of how another investor does this. So Sofia, could you please provide us with an overview of the church commissioners and describe how the values of the Church of England are reflected in your investment portfolio?
Yes, happy to. And good afternoon, everyone. So the Church Commissioners for England, we're the endowment fund of the Church of England. So we invest across asset classes. We invest for financial returns to be able to give back to the Church of England. And the way that we do that is founded in the Anglican Communion's marks of mission. So they've set out marks of mission, of which number 4 and number 5 are the ones that we ground our responsible investment and ethical approach in. So number 4 is to transform unjust structures of society, to challenge violence against every kind, and pursue peace and reconciliation. And the 5th mark of mission is to strive to safeguard the integrity of creation and sustain and renew the life of the earth. And that's really what we base our approach on. So we have, as Emlyn mentioned, we do have an exclusionary approach. So we have areas that we don't invest in because of ethical reasons. We have an ethical investment advisory group that advises on the ethical and theological aspects of certain issues, and then we make the decisions to exclude certain areas based on that advice. So examples could be tobacco and gambling, as Emlyn also mentioned. But then we also have part of the risk assessment. So how we look at our investments, and we mostly invest through external asset managers who invest on our behalf. And when we give a mandate, we do research on these managers on how they consider environmental and social and governance aspects, and how that affects the investments. And then the last aspect is that we invest in solutions to societal challenges when we can. So that could be in affordable housing, it could be in forestry. So we have various different investments in that area. So we have a lot of different approaches, or a lot of different tools that we can use and levers of influence, and we try to use them all to kind of align with our ethical values and the values of the fund, which are grounded in the values of the Anglican Communion.
Terrific, thank you. And in terms of the values of the Anglican Communion, it resonates deeply with us, of course. We are aligned on those values, but also look for our own cues in terms of where we should be focusing our time and efforts. And so one of those is the presiding bishop's Jesus movement, one tenet of which is care for creation. And so it is one of the many reasons why care for creation is a key priority for us here at the Church Pension Fund. So, but speaking of care for creation, if I can stay with Sofia just for a minute, could you unpack a little bit more, because your specific expertise is on climate, and we are in Climate Week, and it's a broad topic. So could you walk through how you are addressing different components of the climate crisis in your work, and what are your priorities?
Yes, yeah, happy to. And so maybe to back up for a moment, we've set a target to be net zero by 2050. And what that means is that we would like to align our portfolio with a world where we do not emit more greenhouse gas emissions than what is taken out of the atmosphere by human activity. We want to do that by influencing the real world emissions, not just do maths on our portfolio, which you can do by buying offsets. So we've identified 3 levers of change, which align with our kind of broader approach to responsible investment. And they are aligning our processes. So that's really the maybe slightly boring bit, but it's having good governance. It's our exclusions. So we exclude companies that are heavily involved in coal, and as well as newly announced that we are excluding companies that explore and produce oil and gas to allow, or where that's the majority of the business, because we don't believe that that's aligned with our targets. So we have that element. We know that our exclusions, we're not the largest fund, so our exclusions won't have an impact in themselves, but we do believe that they kind of influence the system. Then we have engagement. So we go into dialogue with companies that we invest in. So we invest in everything. It could be companies, large companies listed on stock exchanges. It could be privately owned companies through private equity or venture capital, but also real assets like forests or farmland or real estate. So we really invest in everything. And we have dialogues with our counterparties. So it could be investment managers, could be companies, management of companies, but it could also be tenants in our farms and how they build resilience and think about the future of farming, or it could be real estate tenants as well. So engagement is a very large proportion of how we try to influence change. And then the last element is how we invest in solutions. So that could be investing in the energy transition through renewable energy, but it could also be sustainable forestry, or it could be enabling some of our tenants to be able to, for example, providing the rights to build renewable energy on the land, and things like that. So we really try to target and use our available levers. We know we can't solve the climate crisis, but we can be part of the solution, and we can be an active part of the solution. So that's really what we're aiming to do.
Terrific. Well, thank you. Maybe we can pivot off over to Mathew. Mathew, you work with faith-based investors across the world, including those rooted in Judeo-Christian traditions, but also Eastern religions. Could you speak to the broad range of religious traditions with which you work and how environment is reflected in their financial or investment decisions?
Sure. Hi, Chris. Hi, everybody. Good to see everyone. Yeah. So FaithInvest is global. We work pan-faith. So we work with Abrahamic faiths, Dharmic faiths, Islam, and others. In fact, our co-founder right now, Martin Palmer, is in Hong Kong working with the Taoist Association of China to set up essentially an investment guidance platform for practitioners of Taoism, where there really isn't any guidance. So if you look at, for example, Islam, in the Quran, the basis of Islam, there's a lot of talk about the environment, our role and responsibility for the environment in the Quran. But when you go to investment principles and you look at Sharia law in Islam, which really dictates what you do with your money, how you invest your money, there's not much in there about the environment in Sharia law. So one of the things we're also working on there is a project called Al-Mizan, which is modeled somewhat off of Laudato Si that the Catholics have, and we can talk about that a little bit later. But it's a document that would provide guidance to Islamic investors on how to invest their assets, integrating aspects of the environmental guidance that is in the Quran into their investment portfolios, because there really isn't any guidance there right now. We also work with Buddhist organizations as well. The Buddhists in general tend not to accumulate cash. As soon as they get money, they tend to invest it in a hospital or a school or property or a forest. But sometimes they do, and we're meeting more and more Buddhist organizations that are now thinking they need to save some money to pay for example, healthcare expenses for aging monks and nuns. So recently we've actually been working with Buddhist organizations on, okay, if I'm a Buddhist, how do I invest for the long term in line with my values? And we actually just put up a case study of a Thai Buddhist forest tradition organization that we set up an investment program for, an investment policy. And as a forest tradition of Buddhism, environmentalism was central to their investment policies. So it's sophisticated and something like you'd read maybe from Church Pension Group and how they approach it. So wide spectrum there, and a lot of movement going on right now outside of the in some of the Dharmic, Islamic, and other faiths.
Quite a broad overview, and just I think sort of the headline there really is that those religious across the world are all looking to understand how to reflect values in their investments, values in finance. How do we link faith and finance? And that's a challenge that we all work through as we are stewards not only of this earth but also of financial resources. So Emlyn, can we maybe come back to you, because I really do want to focus heavily on climate, given the climate crisis that we currently face. In your working with institutional investors, how has the issue of climate specifically evolved in recent years? And are investors taking these issues more seriously? And if so, how? I think.
Sorry, the short answer is yes, they are. But I'll just give you a little bit of history here. Over the 3 years that I've been doing this at Albourne, a few years ago at that point, there were only a few investors seem to be concerned. And unsurprisingly, faith-based clients were quite prominent in that group in terms of numbers. Then as global awareness of some of these broader social issues, including public health vulnerabilities, issues around discrimination on gender or racial grounds, became heightened during the sobering days of 2020, which is when the pandemic actually settled on us. It would appear that stakeholders transmitted this awareness to the investments, and we first began to see inquiries about these broader sustainability concepts, and that moved to a sense of vulnerability, to hidden risks, a desire to try and deal with these risks, and of course for us to provide solutions for that. Things have progressed this year. We've seen a gradual growth of awareness, interest, and intentionality amongst investors. And things have progressed. And this year, the focus is very much on impact investing. We're getting a lot of inquiries about impact opportunities. And we're seeing interest in several themes, but the greatest concentration of interest is around climate investing. We're seeing people looking for opportunities around renewable power generation and all the infrastructure and innovations around it. And that's more in the sort of infrastructure space. We also have people looking for some of the clever things we need to distribute and optimize use of that technology. So we see of that power. So we have climate tech. We also have battery and storage technology, transition fuels, new fuels such as hydrogen and so on, and electric vehicles, related charging infrastructure and domestic installations. We're seeing an interest in decarbonization of other sectors, such as conversion of steel production from blast furnace to electric arc, improved efficiency, thermal efficiency of, for example, supermarket chains, also things in carbon absorption and storage, and also nature-based capital. As I said, these can be expressed in many different ways via, activist hedge funds investing in public markets, or infrastructure funds, or private equity funds, or venture capital funds, and underlying investments in that. So we've seen a kind of movement from initial awareness, a slight concern about risk, attached to that risk, and now the focus is turning to opportunity, and climate is looming very large, not only because it's such a huge crisis, but because of the economic transformation that addressing it actually will involve, and all the opportunities that it actually presents.
Well, and it's extraordinarily complex, as you outlined, in terms of not only the types of investment opportunities, but there's a lot of money flowing into these kinds of solutions. And the questions that we wrestle with, quite honestly, is with all this money flowing into climate solutions, some will succeed and some won't. And so how do you work through the nuance of finding the right opportunities? Related, though, you talked about different industries and different kinds of investments. I'm going to quote Tom Steyer, who is an environmental activist, former presidential candidate, who now has his own investment firm, and he used an analogy that I felt was fairly accurate, very accurate. Is if you think about the role that the internet played years ago, where you initially thought of an internet company purely as a technology company, but then the internet has permeated every single company and industry today, right? I do believe that as you alluded to there, Emlyn, there are situations where climate will permeate every single industry today. So if you're a real estate company, or you're a financial services company financing carbon intensive industries, or if you are a consumer products company, all companies need to think about climate and climate related risks and opportunities in their business operations. Pivoting back to Sofia, I talked about different asset classes, and the audience here may not necessarily be experts in portfolio asset allocation. So as we think about asset classes, that is stocks and bonds and different kinds of stocks and bonds and real estate and more esoteric strategies, climate plays a role in all of those different asset classes, and the Church Commissioners has a broad investment portfolio. So could you talk to the different kinds of investments that the Church Commissioners has, and then specifically then, how do you, as the expert in climate and sustainability, sort of insert those as the questions around environment and sustainability into the investment discussions?
Yeah, happy to. As you mentioned, there are a lot of different types of investments. So if we start, for example, with the largest part of our portfolio is invested in kind of listed companies, and that means that they're listed on a stock exchange. So it's the larger companies in the world. And the way that we invest in those is through external managers. So we have a lot of conversations with those managers about their approach to sustainability, and we will give them a questionnaire to understand their approach to, for example, climate change and how they think about that before we invest with them. But the way that we then look at the impact of the portfolio is that we have kind of data providers where we can get information on the emissions of the portfolio. So that's what we're currently looking at. So the more you emit, the higher your climate impact. But of course, that doesn't stand in isolation. So you have some parts of the economy are just inherently higher emitting than others. And we need to understand what drives the emissions. So for example, we have a manager that invests a lot in electric utilities, but currently utilities do emit a lot of greenhouse gases because they mostly get the energy from fossil fuels. So they will look really bad if you only look at the emissions. But then we also know that to transition to a low carbon economy, we do need electricity. It's a very fundamental piece of the actual transition. So we need to understand the kind of trajectory of these companies and understand where they're headed and not only look at the emissions in isolation. So it's actually one of our highest emitting managers, but we also think that they really understand the transition and how these companies can contribute to a low carbon economy and actually transition away from fossil fuels and towards cleaner types of energy. So that's an example from our public markets or listed portfolio. But then we also have things like in our infrastructure portfolio where we will invest in renewable energy that's really focused on products that contribute to solutions. We are increasingly speaking to our managers about getting data on, for example, the emissions of the assets, but also avoided emissions. So if you operate renewable energy, you're actually enabling the economy to avoid emissions from elsewhere because you're producing electricity from clean sources. Sorry, so we're trying to start understanding that a bit more. Then we have in our real assets portfolio, we did, so that is before my time, so I can't take credit for it, but they did a large exercise in creating a baseline understanding of the environmental impact of the portfolio and understand where emissions come from. There's certain parts of, we have a significant farmland portfolio. If you have livestock, that just has high emissions, but there are also certain type of land that you need to understand what's suitable for that type of land. So the climate impact is never in isolation of the rest of the assets or the rest of the investment strategy. So it's always put in a context, and we need to understand the context to understand how we can help reduce the impact and how we understand the impact. So we do it in a lot of different ways. And some of the ways that or some examples of how we've then worked with it is that all of our forestry portfolio, all of the standing timber, so it's most of it is commercial timber, but it's all sustainably certified, which means that we have minimum requirements for things like biodiversity, so it doesn't only become a monocrop or only one single species. That also helps on the resilience when you get things like weather events or just over time. So we have a lot of different ways of trying to influence the sustainability from an environmental aspect, and that also ties into, we see climate change as a big theme, but nature loss is another big theme, and they're interconnected. And then social inequality is the last one of our three large themes. But yeah.
Well, and social inequality and the environment run hand in hand, right? Because those who contribute least to climate are the ones that are most impacted by it, right?
Yeah, Yeah, definitely. And it's something like we see them as three separate themes, and we do have work streams in the three separate themes, but they do overlap. They're really interconnected. One of the key reasons why we do want to see emissions reductions is because if we see a large increase in temperatures, the people who will be hurt are the ones who are already suffering the most. So it does really tie in together.
Fantastic. I'm going to pivot. Actually, I want to try and respond to some of the questions that are being posed in the Q&A, and again, encourage anybody who is interested to pose a couple of questions. Sophia, I don't know if you have a point of view on this, but there was a question posed in the chat around what is your position with respect to wind farm development? Do you have a thought, a point of view?
So we do invest in wind. There are challenges around whether people want them close to their houses when we look at onshore wind. But we do invest in wind. I would maybe add that there is not a single company or not a single asset in the world that does not have negative impacts. But where we're looking is that the positives need to outweigh the negatives. That's a difficult assessment, but we do think that clean energy sources are significantly better than the fossil counterparts.
And that's a very important point in all of this work. It's highly nuanced, and there is no perfectly clean company, right? And so as you think about the nuances of underwriting potential prospective investments, clearly you need to think about possible secondary and tertiary consequences of something that on the face of it looks quite good. How do you manage the secondary and tertiary related risks? So another item that comes up quite often in our own engagements is around the relationship between mining companies and the need to transition to a lower carbon economy. Many of the mining companies are the ones that are generating or are sourcing the needed minerals for the clean energy transition. At the same time, they have to think about some of these other considerations around the communities that are being impacted and responsible mining practices. So all very key. Another question that has come up in a couple of different ways is what is the relationship between the church pension fund and Episcopal relief development? And also to what extent would the church pension fund be willing or able to invest in individual roofs for parishes? So on umbrella, we are, as a pension plan, we must generate market rates of return. So we cannot be, the term is often called concessionary, which basically that means that we are not able to take a lower rate or take incremental risk with the pension dollars. The pension dollars at the end of the day have one purpose, which is to provide to fund the benefits that we have promised beneficiaries for years to come. Now, we firmly believe that we can keep that promise while also doing some of the positive social impact work that we're describing today. And we can also be very mindful of the values of the investments that we're making. But at the end of the day, we can't invest in below market or concessionary returns. Episcopal Relief and Development, of course, is in the business of making grants and doing charitable work. And in all of this work collectively, there's a spectrum of, again, grant giving versus full-on values neutral investing on the right. We're in the middle where we cannot be on the grant making side, but we are values integrated in everything that we do. The other piece to keep in mind is that we do not make smaller or retail investments. We invest the entire portfolio through investment managers, and they are large and institutional scale. So hopefully that answers some of the questions that are out there. There's another question that just came through. I don't know if any of the panelists have a point of view on stranded assets, and to what extent are stranded assets being factored into the risk calculation for any given company or industry. Sophia, do you want to take that one?
I'm happy to. I should mention that, like you, we invest predominantly through external managers. So we don't make individual decisions on individual companies, aside from when we exclude them from our portfolio, which our exclusion list our managers then kind of live up to. But in terms of stranded assets, that is a key reason why we decided to divest from the oil and gas companies, and as well as coal. So I think there was also another question in terms of whether the oil and gas companies should be part of the solution. We definitely think that they should, and we did engage with them for more than a decade, and we wanted to bring them along. We think that would have been a much better solution. Unfortunately, they haven't shown that they're willing to do so. We believe that if they don't transition, their assets will become stranded. And we don't think that's good for our long-term financial returns. Some of these risks, we talk about whether it's positive or negative towards our financial returns, and often it depends on the time or the horizon that you're looking at. We're a long-term investor, and we do think that it's a long-term risk whether these assets will become stranded. So it's definitely something that we factor in.
And we do factor that in as well. One of the conversations that we have with the managers that invest on behalf of Church Pension Fund is we believe strongly that as Sofia has just outlined, is that there will be a transition to a lower carbon economy. And in that transition to a lower carbon economy, assets will get stranded. The question is, what is the pace and slope of that transition from where we are today to where we need to be tomorrow? And so we rely on our managers to be very thoughtful about their underwriting of individual assets to the extent that they are at risk for anything related to stranded assets. So that is part of how we address that issue. Maybe pivoting back to Mathew a bit, you touched on Laudato Si earlier, and I think that just a fascinating and inspirational example of faith-based leadership on the issue of climate. And so Pope Francis had put together this second encyclical, Laudato Si, and it really sparked a movement to take action on climate. So, but some of our audience may not necessarily be familiar with that work. Could you describe it and sort of the movement that followed?
Sure. Yeah, really important document from the Vatican for followers of the Catholic faith, but also addressed broadly to all faiths on interpreting the guidance from the Bible into action, into how you act as an individual in the world, into how you act as even as an investor in the world. What do you do with the energy you have, either energy captured in your acts or your assets or other things, and how you align those in a way that conforms with the views on the environment that are captured in the Bible. So it was part emotional appeal, sort of pointing to the problem, saying we have a problem, and the solution is you. And if you're the solution, here's how the Bible and our Catholic faith guide you to become the solution. Very popular document. Movies and other things have come out of it, and it's also been a reference point for most investment policy and guideline writing for Catholic organizations. They have to have some reflection on Laudato Si, and you'll usually see some reference to Laudato Si in Catholic investment policies and guidelines. So it's filtered through to investments. Has it been fully realized yet in all investment policies and guidelines of Catholic organizations? No, it's definitely a process. And in fact, our current CEO is in Rome this week and has learned that there'll be a follow-up to Laudato Si, essentially a Laudato Si 2 coming out in a couple of weeks, I think possibly the first week of October. So look for a lot of press around that, a lot of press coverage, a lot of news stories around that. That's going to be a big deal in the Catholic world.
Very powerful and very influential in terms of taking action on the issue. And Mathew was alluding to the CEO of FaithInvest, a woman named Dr. Lorna Gold, and marvelous, really energetic, focused individual who is committed to this shared work. And she was part of a movie I just want to quickly advertise, because there was zero advertising budget for it. But there was a movie called The Letter, which is a remarkable film in which the Pope reaches out to those individuals most affected by climate change, which are the poor, the young, the indigenous, and the environment broadly. And I highly, highly recommend it for anybody who is interested. I believe they're going to put that in the chat, but it can be, information on it can be found at www.theletterfilm.org. Excellent work.
Emlyn, Chris, if I could just,
yeah, please go ahead.
If I just add one thing to that, expanding on sort of faith adoption of their beliefs and values in how they invest. And the Catholics are working on it one way with Laudato Si and other efforts that they have to try and get the faith values into how the assets are invested. And other faiths are doing something similar. I mentioned Al-Mazan and the Taoist Investor Hub and other efforts. I was surprised when I came to this space of almost 4 years ago now. If someone had asked me what percentage of faith asset owners invest in line with their values, I would have said 90 or 100%. These are values-driven organizations. Of course, they're going to integrate their values into their assets. And what I've learned is it's far less. So we've actually read a lot of investment policies and guidelines from different faith organizations. And we actually have a new study coming out next week on this, showing that it's only about 55% of faith organizations have any reference to their values in their investment policy and guidelines. 45% don't at all. It could be a generic policy from any organization. So one of the things we're doing at FaithInvest, you talk about faith consistent investing up front, we're really focused on that 45%. How do we get more faith asset owners to just integrate their values and beliefs into their assets? It's challenging. You've heard some of the challenges already today, and there was a great question about Chevron in the questions. How do you make some of these decisions about what to own? It's a challenge, but we're here to help. Church Pension Group, phenomenal. You're sort of a beacon to other faiths on how to do it. Church of England, a beacon to other faiths on how to do it. And other faiths are looking to you, on how you're doing it as well, so that we can get that 45% down and get more faiths actually investing in line with their values.
Yeah, totally agree. And I hope we can change those numbers by the time of your next study there, Mathew.
Yep.
Interestingly, you mentioned sort of the work of starting a faith-based investing program. In my role, I have the pleasure of talking with different parishes, endowed Episcopal institutions, and others who are just starting this journey or trying to figure out this journey. And my big message to them is, don't let perfect be the enemy of the good. Get started. Work through some of the challenges, but just get started, because it's highly nuanced and nobody gets it right. But one recent conversation that came up in one of these discussions with an endowed institution was confusion these days around the overall concept of ESG. That is, they've seen all the headlines that ESG is bad, thinking about environment is bad, and that ESG is only about the moral calling to care for the environment, but as fiduciaries, we can't think about ESG. But Emlyn, I'm wondering if you could sort of respond to that, because that debate has been largely in the news here in the United States. What is the situation like in Europe, and how do you think how is that noise coming across the pond?
Thanks for that. One of the issues is the way this debate has gone. There's been so much focus on labels and terms that we've kind of, in a sense, taken our eye off the issues. And ESG was a very handy, I would say, abbreviation for this new way of looking at risk. But if you look at, for example, the SASB framework, I won't bore you with the full. It's a framework for being organized and structured about trying to understand the sustainability, the ESG risks, if you like, that might come from an investment. And if you look at them, they have 5 different pillars where they have the environment, they have human capital, which is dealing with employees and people in your value chain. You have social capital, which is dealing with the impact on society. You also have leadership and governance, which is looking at tone from the top. And then also business model and innovation, how you're implementing new innovations and what impact, they may be having in some of these other things. So that's 5. And so, we sometimes just use the term sustainability, and the European regulators as well actually condense it all into the term sustainable investments and sustainability. And so the European regulators have been very intentional in their approach to dealing with these issues. They realized a few years ago that there was growing interest from the investing public in such investments, and that there was a significant growth in the number of funds that were being labeled ESG funds, as they call them, and that there was also a huge amount of capital being allocated to them. So they were the first off the block with regulations around this for financial services. This was in 2021. Now, because there was this huge interest, they were more than anything else focused on preventing mis-selling. There is this phenomenon called greenwashing, which is related to the tendency to overstate and misrepresent the sustainability credentials of an investment proposition. It's called greenwashing, and the regulators were very focused on that, and so they created a fairly robust in terms of rigidity framework, and they called it the Sustainable Finance Disclosure Regulations, and that is SFDR for short, and it requires investment firms offering such products or advice to provide certain disclosures in their websites. They're also supposed to provide certain disclosures in their fund documentation, and for the most intentional of such products, so which actually have sustainability objectives, or like climate objectives, for example, they're required to provide specific reports on key performance indicators showing how they're doing on various fronts, including, for example, greenhouse gas emissions, where this is relevant. So there was much excitement in the run-up. There's quite a lot of uncertainty as to how the rules were actually going to end up, but they were implemented, put in place. There's ongoing dialogue with the industry around it. And one big challenge was, those KPIs I was talking about, they actually need to come from the companies that are being invested in. So if you have a fund investing in companies need to be able to provide the information to make it possible for the fund to provide that information to its investors. Now, we have a new regulation coming into force now. It's actually been adopted and it will come into effect in 2024. In Europe, it's called the Corporate Sustainability Reporting Directive, CSRD, and that will affect companies that are much smaller than used to be the case. Before, they had some sort of regulation for that, and it affected 11,000 companies, and the new regulation is going to expand that to 50,000 companies, with some of them with revenues as low as 40 million euro. So we have regulations governing both investment services and products, and we also have reporting that supports companies, or that drives companies in those products to report and support this product reporting as well.
So
I tell you, Chris,
please go
Chris,
ahead.
I was gonna say, my colleagues in Europe look at the U.S. in bafflement over the over the whole ESG kerfuffle. It just doesn't exist there to the extent that it does. That has been so politicized here. Yeah, so different environment. And there, as Emlyn mentioned, they're moving ahead on regulations in Europe.
Yep. So yeah, Europe certainly led the way, and I guess I would, just to summarize, there were a number of different regulations that Emlyn outlined there. I think a few takeaways that within Europe, number one, there is a desire for consistent marketing of investment products and strategies. Two, there is a belief that these issues matter in terms of financial risk, and so companies must disclose them, and asset managers consider them in the context of their role as fiduciaries. And the debate here in the United States is a kerfuffle, but our belief is that these issues are both moral issues and economic ones, and that they need to be addressed. We are almost at time, and this has been a fantastic conversation, but I started the conversation with a bunch of doom and gloom around the climate crisis, and the climate crisis is real, and it's easy to get discouraged. But if I might, in the last few minutes, if I could ask each of my fellow panelists to say, given this crisis, what gives you hope? So maybe starting with you, Sofia.
Happy to start. I think that there is a lot to be frustrated and sad about, and we continue to have our work cut out for us. But there are also really positive signs. So two examples are that renewable energy and electric vehicles, the growth in deployment continues to kind of beat expectations. So it's moving a lot faster than what we expect and what we continue to predict. So things are moving, and they're moving fast in terms of transitioning.
Excellent. Mathew, what gives you hope?
It's a lot of those efforts that I mentioned, the Amazon, the Dallas Hub, the Laudato Si, and we're just seeing a lot of interest in movement at the macro level, along with the micro level in faith organizations. And faiths are huge. They have a lot of assets, and they're very, very powerful, both as moral and values organizations, but also practically, economically, they're very influential as well. So I'm very heartened by a lot of the movement I'm seeing around the world across faiths.
And Emlyn, what gives you hope?
Me, more than anything else, my undergraduate degree was in mechanical engineering, and that was why I became first introduced to the concept of impact. But leaving all that aside, the point is, for me, my hope comes from my belief in the power of humans to innovate. That's really where my hope lies, and it's amazing what's already happening in terms of innovation. And of course, it will need capital, and I guess that's why we're all sort of focused on that. And so the humans' capacity to innovate, and I believe the investment industry is growing awareness of the need to invest in those quite promising opportunities.
Can I add one as well?
Please, yeah, I welcome it.
I think the enthusiasm and the increased engagement from more and more people. So to provide solutions from local level to global level, and particularly when it comes to young people.
Yeah. I might just echo what Sofia said. I get energized by young people. In fact, I had the opportunity recently to speak to a young Episcopalian who is studying engineering at Berkeley, and he quoted some of the statistics that you just referenced around sort of the pace of innovation being faster than expected, and he was focused on the electric car industry, but really there's an optimism around innovation and investment in innovation that we hope will bring about some meaningful solutions to the challenges we face. But I would, as someone who is, as was outlined earlier, 30 years into my career, I don't want to put the burden on the next generation. I think we still have some work to be done, and it's our responsibility to get going and address this urgent crisis. But as one other piece that certainly gives me hope are the three individuals on this panel. I really am grateful for all of your leadership, your ideas, and your contribution to this discussion. It was a terrific discussion, and thank you so much for being here. And for the audience, thank you for being here. I hope this was worthwhile, and we look forward to seeing you at the next Insights and Ideas.